Well, we just got some new ethanol production numbers. I wanted to run those by you just so you're up to speed. And on the production this past week, it picked up a little bit, 23,000 barrels a day higher. 1.048 million barrels per day this time around. It had been 1.025 last week. And the 4-week average actually picked up about 10,000 barrels this week to 1.044 million per day. Ethanol stocks increased 500,000 barrels to 21.1 million this week. And one thing that's noteworthy, usually we have no imports this week or this last week. We had 20,000 barrels of imported ethanol. So that would be kind of a net negative there. Well, I want to go to the phone and bring in Todd Bubba Horwitz at BubbaTrading.com in Chicago and find out what's going on in the markets. We're once again kind of selling off after a little bit of strength in the overnight trade. What's behind that?
Well, you know, look, Marlon, we're in a very volatile time. You've got some reports coming out. You got some weather. You got all kinds of things that are just kind of confusing traders. And basically, if you really look at them, corn's really just in a big, wide, sweeping consolidation. Beans are in a downtrend right now. And wheat is kind of trying to make a move back, back towards the upside, but has given up a lot of its gains. We can expect this kind of action probably almost on a daily basis, which we've been seeing it because this is the type of action you expect when you've got all different factors that are going to affect markets, including the equity markets as well. We've got all these little issues, and they will create much more volatility in markets as they trade by.
Okay, so walking through these, we have the corn. July is 4 higher at 663 3/4. December 6 1/4 lower at 532 3/4. Real quickly, why is July just trading independently from everything else right now?
Well, it's coming off the board, so it's it's going to go in. It's into delivery, and that those front delivery months they can do anything. There is, we saw with corn last delivery that corn went to 770 at delivery, but not got nowhere close there anywhere in any other contract. And this is, that's the dangers of being around or trying to trade with the delivery cycle, because anything can happen and you can get stuck, on the wrong side with no hope and no out. So that's, again, we don't look at the delivery months because there's too many things that can happen that can create movement.
All right. So the September contract is basically going to be taking over for the nearby, and that's 6.5 cents lower. What about this wheat market that you were talking about here, Todd? It is surging ahead here today, even though the harvest is increasing in activity. That doesn't seem to go hand in hand. Is that a good marketing opportunity today, in your opinion?
Well, I think you need to be more careful still, Marlon. We have a lot of things going on in these markets in general, and I think it's, again, you should always be hedged. That would be one thing to protect yourself. But as far as looking for a spot to maybe buy, I'd like to see a little bit more evidence that we're going to break above this consolidation range. And if we look at the September, probably we can still go down to about 640, and right now we're at 661. So I'd like to see them above 670, and I'd be more anxious to think about being a buyer right now. I'd rather be on the either flat or on the negative side. So I always want to be hedged, make sure I'm protected.
So September Chicago wheat, like you say, 661 3/4. That's up 6 3/4 right now. On Kansas City, you have that September 9 3/4 higher at 615 3/4. In Minneapolis, that September contract now 17.5 higher at $8.25 cents. I want to go back and catch these soybeans here for a second. On the let's go with August. Soybeans 4.5 lower at 1347.5. Thanks, Todd, for the comments. Todd Bubba Horwitz of BubbaTrading.com. We'll be back and take a look at livestock next.